So let's talk FSD. Are you guys seeing momentum in FSD? One of the reasons why Piper Sandler gave that recommendation to buy it before 1010 was because they interviewed, what's his name, Martinez, from the guy who created, Elias Martinez, created FSD Community Tracker, the website where 107 FSD drivers, beta testers go in there and they submit their data. And they, listened to him and said, yeah, looks like that there's improvement or the rate improvement with the version 12.5 series. Same time, people are saying, hey, how come it's not yet available for Model 3 cars, the hardware 3 cars? It's taking them a little longer. Is it getting better? Omar, you're the perfect person to ask this question. Do you see momentum building, or is it stagnant with FSD?
Yeah, they're really moving much faster than anyone expected, or even faster than most people realize, in part because not everybody has gotten the software yet. And they're working hard to roll it out to everybody, but going from having the nag to a hands-free system is the biggest jump, the biggest update in FSD history. So they're really validating the hell out of this thing and making sure it works really well on hardware 3 cars as well. But every car is going to get it, even the hardware 3 cars are going to get it, and it'll run just as well as hardware 4. We have seen cars outside Chuck Cook's house driving it. We've seen 8S test drivers with hardware 3 running it, and it will make it out to everybody, as annoying as it is to wait. And I think hands-free is just going to be a major, major jump in user satisfaction. You can just talk to the people who have tried it so far, and the the reviews I've heard from people on X have been much more positive than any other version. And you can check out, for example, the video I posted today where I took it into Los Angeles and did an hour of real rideshare driving with FSD. And other than having to help it turn around because it went into a McDonald's parking lot that didn't have an outlet and it can't reverse yet, it did all of the pickup and drop offs itself. So what people are going to experience here is hours of driving without interventions will be normal. And this is still the hardware 3 model. Looking ahead to the new Tesla Cortex facility in Texas, where they're bringing on an additional 100,000 H100s and H200s, in addition to the current 35,000-ish cluster in Palo Alto. That's going to allow them to make this thing drive even better pretty much automatically. No engineering breakthroughs are needed. Simply scaling up the current approach with more training compute, more data is going to yield better and better results. So I think things are looking extremely promising. Doesn't necessarily mean that robotaxi is going to launch tomorrow or even 12 months from now. But I think that as an ADAS system, this is going to be something that everybody wants to have now that it's hands-free and can work for hours without an intervention and is improving rapidly. Finally, I think, there seems to be a lot of confusion still about the 1010 event. I would think people will probably be disappointed just because they're saying, they'll say, well, okay, I was expecting to see a leprechaun. There was supposed to be a pot of gold at the end of the rainbow. For some reason, people kind of throw whatever they imagine at the wall for some of these events. But I think this is pretty clear that this is a product unveil, right? So they're showing off really new vehicles at this event. And we know that one of the vehicles they're going to show off is going to be the Cybercab, which has no physical controls. So we're going to get to see what that vision of a robotaxi looks like from Tesla. But there may even be some other vehicle unveils as well. For example, maybe some of these new, more affordable models. They say they're going to start production of these models in the first half of 2025. Well, are you going to show them to us? I feel like they probably have to show them to us at some point, if not at 1010. And Elon did say, well, we're delaying this so we can also show a few other things. So I think there could be something there. I don't know of any vehicle unveil ever that the market ignored for Tesla. Pretty much every vehicle unveil, they ended up unveiling something that became a material product. The only one you could say maybe not so much was the semi unveil, but they are now in the hands of customers and they are starting up mass production. That one's been a little slower, but pretty much every vehicle unveil has been a material new product. This isn't an AI day. It's not a autonomy day. It's a vehicle unveil. And they're going to show off some new products that they plan to really build.
Right. Okay, well, let's stick to FSD for a second, because I do want to come back to the new Model 3 product that Tesla revealed. That's a brand new vehicle, right? Lower cost, $2,700 lower. This may not be meaningful, but it's still a show that they can reduce the cost. So other companies look like that they're making progress, right? So Waymo this morning announced that they're now serving 100,000 paid trips per week. And so that's quite a bit. I think, Omar, you said 5.3 million miles. I can't
5.2 million trips a year run
trips that
rate.
you run right now, which is double
That's
what
just
they were doing.
100,000 times 52.
Oh, gotcha. Okay. Okay. I thought you had some other number there. But same time, they announced their sixth generation of their Waymo driver. So this is 13 cameras, 4 LiDAR sensors, 6 radar sensors, external audio receivers. This is their sixth generation, and they say that it actually will be able to reduce the cost of them to provide this, at the same time increase the safety. Interestingly, the reason why they have so many sensors is to help improve the redundancy that allows them to, function in severe weather. At the same time, they say the reason they did the sixth generation was to reduce the redundancy and reduce the cost by maintaining safety. So they've made this announcement. They've been actually expanding their services in both San Francisco and Los Angeles. Although if you look into it, which we did, it's actually a small amount of square miles that they're adding, but they're still adding and growing it. And there's a wait list for this now. So at the end of the day, customers are able to hail these autonomous robo-taxis, and they're able to take them, and they're able to be driven around. So that's good progress. Did anybody here in the panel want to talk about Waymo's progress?
Yeah, they're doing amazing stuff. I use the product a lot, and autonomy is here. I think all investors need to sort of digest and understand this, that autonomy is here and that autonomy and robotics are going to change the world. There's a massive market opportunity here. At the same time, in the United States alone, there are 100 million rideshare rides every week. And around the world, it's as many as 500 million. So the United States is about 20% of the global rideshare market. So they're doing 100,000 out of 100 million, which is impressive, but it's 0.1% of the global rideshare market. So now that autonomy's here, we figured out how to make the technology work. It's not really a question of can we, it's a question of how do we make this a business? How do we scale this? And I can't think of a single company on earth that's better positioned to make millions of autonomous cars to meet the world's demand than Tesla.
I know you guys don't want to talk short term, right? But what might happen in between here and October 10th? If this momentum for more investors, the big whale investors, to recognize that autonomy is here, as you said, with Waymo doing it, but also that Tesla's progress is significant. Will we need to see 12.5 point whatever be released to everybody? Would you need to see some sort of data point that's released by Tesla before then? Anything that you might expect before this happens? You want to jump on that, Jeff?
Well, you're going to see regular updates on, on the very short term in terms of deliveries. you're going to see new updates in terms of FSD and maybe potential releases or expansion. I think a big announcement would be a geographical expansion of FSD, but you could also see it on more vehicles going to hardware 3, going to Cybertruck. I don't think it's going to move the stock per se, but I think geographical expansion of FSD could be meaningful. And yeah, I think these are some of the things, and obviously they'll have a delivery update before 10/10, and we're looking for strong. I think everybody's looking for strong production and delivery growth in that number, and who knows what could happen over the next month. I think when you're a company like Tesla and you've really started to accelerate the number of areas that you're actually working in. Remember, if you rewind back 5 years ago, it was a very different company in terms of the number of verticals they were in versus now. And so, yeah, you could get a couple of interesting data points, whether it's a FSD expansion and FSD partnership. Something could happen along those lines. But also, September is kind of a volatile month from a market perspective. And the next 2 weeks are pretty low volume, although you've got a big, NVIDIA earnings update end of next week. This tends to be a very kind of slow time in markets. You'll look at the volumes, everything's off like 25, 30% right now. And then September usually has some volatility. But for Tesla, I think it's honestly, it's around expansion. And there could be a couple of key data points between now and then. We'll see.
Okay. Let's dive deeper into this new vehicle that Tesla launched. It's a Model 3 rear-wheel drive, and they made it much more affordable in Mexico, $2,700 US dollars, less, more affordable, cheaper. They have textile seats as a standard fabric. It's like white ambient lighting instead of the multicolor. They removed the heated and ventilated seats. They removed the heated steering wheels. There's no more rear screen, just manual rear vents. And then they just made the acoustic glass for the front windows only instead of all windows. So this is just in Mexico, and but they, $2,700. Is that too little of a reduction, or is that more than most people are expecting? It's not yet spread to U.S. and Canada, but I would assume that if it's successful there, that they would share this, or maybe they won't. Right? What do you guys? What are your thoughts on that new vehicle?
If you look at it from a COGS perspective, if you can take that much, you're talking 6-7% of COGS. That's actually a big. If so, that's the MSRP change. If they were able to take that down commensurate in COGS, because I don't think they're driving tremendous compression with this new model. Although you do typically have margin compression at the lower tiers of your product, and you have expansion as you go up in the portfolio tiers. But it looks like there was real trade-offs made here. So yeah, I think they got to get some volume behind it for that profit pool to grow. We talked a little bit about it, Herbert, yesterday. This is on one hand, I've applauded Tesla and their ability to drive simplicity in their factories. This is obviously adding some amount of complexity, and you can't just write it off and say whatever, it's fine. But if you compare them, for BYD volumes in EV are roughly similar to Tesla, and they have to produce 19 different models to get there. And you're nowhere on supply chain leverage when you have 19 different models. If you divide it into those individual models, your leverage per part number that you're buying, you're not really getting a lot of leverage in your supply chain. That's why when people look at these, GM and Ford, like, oh my God, they ship so many cars and they must, just have much better pricing than Tesla. It's actually not. It's not the case. Tesla gets their volume out of basically 5 models with some variations under those models. So I like to them, hopefully they're doing, not to get too wonky, but hopefully they're figuring out how to do these builds, how to not have a lot of changeovers in the factory. And I think they can manage it. Then I think they can manage the added complexity, if they do these in batches and do it properly, they can keep the complexity down. But, I think it's a good thing. I think they're building a bridge in their portfolio between where they are today and how do you get to these more affordable vehicles in the first half of next year. And so what these type of offerings do is they kind of put a floor under the current offerings. So all you're doing is really just grinding cogs lower. You're not having to go in and cut MSRP pricing. You basically put in a floor. And so if they can expand the portfolio below this and have these more affordable vehicles, that actually helps the 3 and Y from a margin perspective, put a floor under where they are today. And those teams can continue to grind the cogs down versus always having to fight ASP and cogs, you know, at a similar rate. So I like what they're doing. And you know, again, I think they're just building a bridge to the more affordable vehicles.
You know, when you say building a bridge, it's actually opposite, because you know they've introduced a more affordable Model 3 by cutting out parts. Then how do you separate then the more affordable vehicles? Why not just wait for the more affordable vehicles to come out to offer that segmentation and have a clear segmentation between the Model 3, you know, separate them so that they have further away. You know what I mean? If you bring down the Model 3 price, you better bring down that more affordable vehicle even further.
Well, they may change this portfolio when the new vehicles are announced. They may make some adjustments in the current vehicles available. But between now and that vehicle being available, why not drive, you know, greater than 90% reuse with the current Model 3 and go capture some additional customers at the lower tiers? So that's when I say they're building a bridge, that's what they're doing. And those newer vehicles, I would imagine, would be closer to, you know, $5,000 to $7,000 lower in COGS. At least that's what they should be targeting for those vehicles. And that isn't a good interim step between those vehicles and then getting to the $25,000 vehicle, which is going to even be a bigger jump. So I think by Tesla introducing the interim vehicles, we're going to get greater capital leverage, greater capital efficiency on the existing lines. They're going to be able to they're going to do trade-offs, and they're going to introduce these interim vehicles. They're going to do more trade-offs like you saw, but at a much greater scale and more efficient design. And that's how they're going to get these new interim vehicles. But they're going to increase the capital efficiency and leverage off the existing line. So that's going to help 3 and Y continue their reductions. And then they're going to also start ramping some of these new modules sooner. So I think it's I mean, from the outside looking in, I think the approach is, it's honestly hard to poke holes in it. Obviously, you need to get, you know, the volume needs to be there for all this to work, but they're certainly setting themselves up for that.
Okay, well, when is it coming to the US?
When what?
The Model 3, the new rear-wheel drive Model 3.
Well, I don't know. I don't work for Tesla.
Yeah, I mean, is the expectation that it will spread beyond this? It could just be a test. Of course, it could be anything, but more like if
I think anything Tesla does, they want to get volume
Right.
behind it, to your point. So yeah, let's see. I mean, I think what they're going to do is they're going to see how this goes, and then if it's really successful, I'm sure they would expand it. But I don't think you're going to get a lot of uptake in Canada for, you know, no heat in the seats and so forth.
That's right.
But maybe, but yeah, it'd be more, you know, closer to the equator.
You'd be surprised. Us Canadians were
things.
hardy. I grew up on the streets playing ice hockey with nothing but a mitten. So, okay. Well, let's jump to Toyota. Did you guys hear about this? And it's kind of like, you know, for formalizing their path for strategy is they're betting big on just going hybrid only, and they've announced that they will not do gasoline only cars anymore. Everything they build will be a hybrid, which is gasoline plus electric hybrid. I'm sure they're going to push hard marketing this as an electric vehicle. It does qualify for the federal tax incentives for EVs. And then they'll say it's the best of both worlds. Thoughts on that? Do you guys think this is a smart strategy? Is this a dumb strategy? Yeah, what's your thoughts on this, guys?
For me, I was a big proponent of all vehicles becoming hybrids. Once I got the Ford Fusion Energy, that was my entry into tasting electric. I never did just the pure hybrid. And then add a BMW i3 and then Model 3 and so on and so forth. So, and the whole recapture of energy when you're decelerating just seems like a obvious thing to waste that energy to heat and noise. You know, with the friction, it's just with friction brakes, it's stupid. So I get it. You know, they want to transition their company, so it shows that you know they're not going to go all electric, but at least they're claiming. We'll see if they do. That they will move forward in that direction. It makes sense to me.
I think Toyota's a company that's got a storied supply chain, you know, that really built on, you know, really good fundamentals around, you know, process for node reduction, inventory, so forth. But man, from a portfolio perspective, they have a number of the top selling cars in the world are Toyota. So you have to give them credit for that. It doesn't feel like they're future proofing themselves in a manner that's going to be good for their long term well being. So it's really ironic in terms of how efficient they are as a company, and that's why they're able to have all these top selling vehicles and do the kind of volumes they do. They do 75 billion in sales a quarter. So there's 3 Teslas per quarter in global sales. But the question is, you know, are they future proofing themselves to this BZ4X? I can't even pronounce the vehicle. Their EV. They're doing heavy discounting on that vehicle just to get it to sell in the U.S. in the dealer market. So I think they're a little bit lost on this, and we'll see. I think there's a little bit of a sugar high right now with hybrids. I'm not saying ICE is going away anytime soon. I'm not saying hybrids going away soon, but it doesn't. Those two together are clearly not getting the adoption rate of EV. And if you just step back and you look at the data, the United States used to produce 20 million cars a year, and now they're doing 15. And that's a big drop off. That's 25% drop off just in like the last 6 or 7 years. And you know, the question is where is that going? And I just told you the June year-on-year view of, you know, ICE and total autos down 9%, which means ICE plus hybrid are down like 10-11%, and EVs up a few percent in terms of sales year-on-year. So it's continuing to decline.
Yeah. I think this is going to buy them time, right? They're just going to convert. I think they've already done, of course, the Prius is the first, and now they're going to convert maybe all of their Toyota and Lexus lineup to hybrid-only models. And then that's just going to buy them time. They're going to call them electric vehicles, and then we'll see where this goes. But, so ask if anybody wants to join and ask questions. You can do that. Also, we can move on to the next topic shortly. But, can't add this person as a guest here. Yeah. The other news that came out, of course, is the European Union, right? So this morning, they announced that they have made decisions on the tariffs anticipated for Tesla was at 20.8% tariff. But what they decided to do was just bring it down to 9%. This is on top of the existing 10%, but it's a lot less than what was anticipated for Tesla. In the meantime, these are tariffs for Chinese-made cars being imported into Europe because they felt that European Union is saying that, you know, these Chinese-made cars are heavily subsidized by the government, and that's unfair. Meanwhile, the other Chinese electric vehicle manufacturers, they also saw adjusted tariff rates, but very small. So BYD initially was planned to be 17.4% tariff. Now it's just 17%, 0.4% reduction. Geely is 19.9%, reduced to 19.3%. And then SAIC, 37.6%, 36.3%. So less than 1% change for these. And that makes sense, right? Because SAIC and Geely are heavily subsidized by the government. They're actually owned by the government. BYD is not, but they're also subsidized by the government. Whereas Tesla successfully, lobbied that they are not subsidized by the government, so they should have less tariffs associated with that. So this is, I think, good news. But at the end of the day, Tesla also has Giga Berlin to produce cars in Europe anyways. Thoughts on that? Omar, are you still there? Do you want to jump in on that news story?
Yeah. I mean, I think the European automakers are in trouble. They're slow and they're getting killed by some of these Chinese startups, certainly in the Chinese market, which is where Volkswagen has made half of its profit for many years now. But they're also worried about the expansion into Europe. A lot of Americans probably don't realize how much Chinese automakers have advanced into Europe. And I mean, it's not like they're selling in crazy numbers, but you can actually find and buy these EVs in the European market. So that's really why they wanted to put these tariffs on. They're saying, well, the Chinese government's helping them, which is true to some extent. But they're also just mostly afraid about the disruption that's coming. China, of course, is fighting this, but it looks like it's going to be there. I think it's fair for Tesla, which doesn't really receive state support the same way that Chinese local companies do, to pay less. But I really don't think that they should be paying anything at all. There's already an additional 10% tariff on top of this 9%. So really, it's, I think, trying to block out competition a little bit. And they can try and do that in their local market, but the fact is their auto industry is going to have to compete with these Chinese cars around the globe. So luckily, Tesla does have a factory in Berlin. They can make more cars there for the European market, and the imported cars will be a little bit more expensive. But, maybe if this stays around long term, they could potentially work around it by building Model 3 in Berlin as well.
Yep. Jeff?
I don't know if the tariffs are high enough for the Chinese players. If they figured out how to do a vehicle all in for $15,000, putting a 30% tariff on that isn't going to meaningfully, it's not going to move the needle in terms. You have to look at, when you tariff, you have to look at your domestic ability to produce that product and how competitive you are relative to the global import threat. And I actually don't think the tariffs are high enough. Now, at the same time, I don't think they make a good enough product, but that's just a matter of time before the Chinese make a product that European consumers would actually start to prefer in mass. Right now, it's this Omar was saying, it's really limited in terms of volume and how well it's going through the market. And there's also a big thing with localization and trying to figure out how to land a product, how to get the software side of it, how to get everything right so that local market really adopts it and you start having an identity for your product. So I'm not sure if they're high enough. I think the Tesla ones are, whatever. I don't think they should. Tesla has built up a significant domestic global presence, so I actually don't think that it should be putting tariffs beyond the 10% on Tesla. But we are where we are. All these countries do it. The U.S. for years until 2017, the U.S. did not have significant tariffs on many different models and from many different countries, and it really started in 2017. I think it's going to be interesting moving forward. So right now we have one candidate that's talking a lot about tariffs. By the way, the current administration increased the tariffs on China imports to the U.S. to 100%. So it's not like they're anti-tariff, but The Democrat candidate did not sign the NAFTA bill, the new NAFTA bill. She was actually opposed to it. So I think that whole dynamic between Mexico and the U.S. is going to be interesting. I think that's one of the reasons you see Tesla a little bit slow rolling what they're doing in Mexico. I advise them to do the same. Quite frankly, you've got the capacity stateside, and you can also improve your efficiency and use of that capacity stateside and get more volume out. And let's figure out what the domestic policy is going to look like over the next 4 to 6 years before you commit to a multi-billion-dollar factory. But in Germany, I mean, there's people are definitely moving to EV, so they have to figure out domestically like how they're going to get this right, how they're going to get their cost structure right, so they can compete. Because if you look at 10 years ago, even 5 years ago, those German players, Mercedes, BMW, VW, they had a huge presence and they're doing huge sales in China, and that's all falling off. So they can't compete there. And now they're about to get whooped domestically. I don't think the tariff rates are even high enough. And I think you have a very dynamic situation here over the next couple of years.
Well, let's go ahead and talk about that, because that is news that just came out today and yesterday. So Trump was asked his opinion on Elon, his opinion on exports from Mexico into the U.S., and his opinion on the EV tax credit. So with regards to Mexico, he said that he would take steps to discourage exports of vehicles from Mexico into the U.S. He would impose new tariffs. He would prevent Chinese automakers from building new plants in Mexico. But he encourages these companies to build factories in the U.S. That's the first thing he said. And the other thing that he said was he would consider repealing the EV tax credit, the $7,500 tax credit that consumers get, but also that IRA also includes a certain amount of dollars per megawatt batteries as well. If you make it in the U.S., he would repeal that. And then he also said that he was asked if he would name Elon Musk to be part of an advisory role or cabinet job. And Trump said, he's a very smart guy. I certainly would. If he would do it, I certainly would. He's a brilliant guy. Elon replied with a post this morning saying, I'm willing to serve. But his picture that he posted was as Department of Government Efficiency. Funnily enough, that spells DOGE, which is both a meme and a cryptocurrency. But he's willing to serve. So lots to discuss here. But yeah, what do you think? What do you think, Jeff and Xander? Elon, Trump's comments. My quick thinking about this is that it makes sense for you to stop the hole between Mexico sending it into the U.S. because Chinese makers will just create factories there. They need to make it in the U.S. But this idea that we should not be promoting electric vehicles, stop that incentive. There's two considerations. One is that people don't realize that there's significant incentives being offered to the oil and gas industry and to gas cars to build those. Why are you not offering something similar for the EV credit? But more importantly, if you don't do it in the US, Elon himself said he doesn't support this IRA credit. But look what China's doing. China's heavily subsidizing their industry for electric vehicles. They're punishing the gas. They are now 51%, just as of 2 weeks ago, 51% of all vehicles newly sold are NEVs, new electric vehicles, which include hybrids. So they're going electric really fast. So you're going to find yourself, and you are already at a tailwind, really behind everyone else. So, what are your thoughts on that, Xander or Jeff?
Yeah, I could start. I mean, the reason China can do what they're doing domestically is 10 and 15 years ago, they made decisions on supply chain, on minerals, on the mining of them, on the processing of them domestically. We just started having the ability to do domestic mining, but our processing capability here is very limited. They made decisions on battery supply chain over 10 years ago. So China's been planning for this for a while. So you can start making these, putting these edicts out and again, it's not. It's kind of un-American to say like, we're going to penalize buying this, but you can buy this. And although it does happen in some instances, you see it with cigarettes and other things. But anyway, China can do what they're doing because they've done the long-term planning on supply chain and they're set up very well. So in terms of what this means in the U.S., so first off, any president that gets elected can't come in and just, he can't put an executive order against the law that was passed, through Congress. He can put executive orders through that kind of do micro slices at changes. He can't upend the entire impetus of the bill, which was to basically give credit for battery cell and pack manufacturing and to give consumers a tax credit on purchasing an efficient vehicle. Now, what his administration will have control over is what is on that vehicle list, what's on versus off. And, I can see them having some discretion with that. But in terms of like repealing the $7,500 credit, he'd have to have a Congress that's aligned to doing that and then passing that through the Senate. And then he would sign it. So this would take some period of time, and you need alignment through multiple areas of the government. I'm open to hearing feedback on that, but that's my understanding of how that would work. But again, they could have oversight. The Treasury has oversight in terms of what vehicles are on the list versus not on the list for the $7,500 credit. What else? I talked about China supply chain, and so I mean Tesla is moving in this direction in terms of, at least on the lithium side, refinery, the ability to do the actual refining of materials. But to me, this is Tesla again inserting themselves in the supply chain to be ready in case it's needed and there is a capacity or a cost bottleneck in that particular area, and also to put pressure on the current incumbents in that area on supply and on pricing. And you see this, by the way, trend in multiple areas of Musk companies of doing something similar, whether it's, you see it with Dojo, you see it in other areas as well, of trying to not only be a system level player, but actually they go deeper into the supply chain as needed when bottlenecks are created that get in between you and end state. So when all is said and done, I think there's going to be pros and cons to either administration. The world is moving, towards EV adoption. We've seen the global figures. I think that's going to continue, especially as input prices come down and you have price parity between an electric vehicle and ICE. You're going to be able to get into a $40,000 or $30,000 equivalent electric vehicle, and it's going to perform and have functions that are well superior to its ICE counterpart. Real people make decisions based off of this. As charging becomes more ubiquitous and more available, that situation will also improve. And I think EV adoption is going to continue moving in the right direction. China has the ability to force it a little bit further because the decisions they made upstream in their supply chain a long time ago.
I see this as a difference between a smart car and a dumb car, and that's why it's important. It's not just EV versus gas. Sorry, Xander, were you going to jump in?
No, keep going.
And so it's critical that the U.S. funds electric vehicle adoption by consumers. They need it's when it was originally created, the IRA, it was to support these American automakers, Ford and GM. It's kind of like this, subsidy to make sure that they don't go bankrupt as they transition from gas cars to electric vehicles. They've not done a good job, but they need more. And Tesla said, hey, we don't need this. That's true. But the American car companies, they don't get this. They're dead. If the consumers in the U.S. don't adopt this as fast because there's no more IRA credit, just a little bit, takes them a little bit longer to adopt this. Look what's happening in China. They'll be at 100% smart car versus EVs versus gas cars. They're going to be able to figure out how to create more efficient cars because they've got the volume when they need to build and sell, and they're going to get better and better. And eventually those cars will just surpass. Fortunately, Tesla is here, of course, and they're going to be transitioning away from just EVs into, the true smart car, which is a self-driving car. But if you don't have an EV, then you can't take advantage of this, the self-driving component of it to truly reduce the cost of operations. Anyways, I just concerned that this is a global issue, not just a political issue for the local market in the U.S. So
Do you guys think that incentives for adoption are necessary um, in the grand scheme of things?
yes, that's what I'm saying to you. Why do you think that the U.S. Why is China at 51%? All new cars are now new electric vehicles because they started early, they started strong with their incentives, and they had, in fact, huge penalties if you build gas cars in China. They forced that industry. There are hundreds and hundreds of Chinese car companies formed, and many of them will die. But now you're going to get the best, it's a bloodbath in China, but they're going to survive and they're going to be very strong. That all happened because of significant incentives.
Mm-hmm. And what about like the energy independence portion of like the IRA and incentivizing batteries and like the drill baby drill comment from Trump and trying to incentivize American well, I'll leave it at that.
What's happening? I mean, our output. There was a problem in the beginning, for sure, in this new administration, but our output is strong. The issue is regulations. The issue is kind of all the stipulations on this. So I think I don't. At the end of the day, we need redundancy. We need nuclear. We need multiple forms of energy, and I think we need an energy secretary that really, really, really understands this stuff and really knows what they're doing. I think we've been honestly monkeying around with this for a decade or more, and so we need to get this. We need to get this under control. But yeah, I mean, getting back to there is, this isn't going to come to a head between the U.S. and Mexico, because right now the IRA, when the IRA was being written, it was originally going to be to drive U.S. jobs and U.S. manufacturing, and then it turned into this unbelievable thing where they're trying to get union only into it. That got rejected, and then it opened up to Mexico, because GM and Ford and Stellantis make a third of their cars on the road in the U.S. are made in Mexico. So they got Mexico pulled into the IRA. So the IRA turned into a North America manufacturing thing. So if you do final assembly in Canada or you do final assembly in Mexico, you could fall under the IRA credit. So I think that's an option for the next administration to relook at. Like, what is this relationship? Are we really driving domestic jobs by doing this or not? And then, we probably have to relook at this NAFTA 2.0 again and figure out, is it having the desired results? Because right now, the auto industry, I think, is right now is a complete mess. You've got a lot of jobs moving to Mexico. You have a lot of promises with this strike that happened last year of opening all these additional plants. And all these manufacturers, to a T, they paid lip service, but they're all starting to step back. And you saw on the news, I think just yesterday, that the UAW said that they're going to, if Stellantis doesn't agree to open this plant in Illinois, that they're going to go on strike. Stellantis is up to their eyeballs in inventory. They have 150 to 200 days of vehicle inventory, and the UAW has a gun to their head saying, you're going to open another factory to build more effing cars. In this case, this would be a final assembly in a battery plant in Illinois. So it's crazy. It's totally non-functional. It's not first principles. It's not like, how do we have an auto industry that can survive and be viable for the next 5 decades? I mean, right now I think they're really barreling towards literally a crisis. We'll see what happens, but you see the inventories building, you see the credit tightening, and you see this showdown that they're going to have with the UAW, because all these plants that were promised for manufacturing, to a T, all of them they've all pulled back on these promises. So we'll see how this plays out.
Yeah, Xander, back to your question about the importance of energy. I mean, I see this as both economic warfare and real warfare. You have China that is investing heavily in energy, batteries, electric vehicles, of course, but also bots. And so, this move towards having energy built and having access to these energy storage facilities and electric vehicles and batteries for both bots and cars is so critical, because it will support the data warehouses for AI. It's going to support bots and cars. So it's smart. Everything's going to become intelligent. You need to have this. So I just think that this is much bigger than the auto industry. This has gone beyond that. So we need to be going full force as a country to support and build as much batteries as we can. Of course, Tesla is the biggest representative of that right now, has the best momentum. So we don't want to be harming Tesla. We want to be supporting it, as far as I'm concerned. Sat, did you want to join in the conversation?
Yeah, I just want to add, when you're talking about the incentives, I think in the beginning of these kind of major transitions, it's helpful. Because in different places, because if you're in like California or other places in the US even, where every few seconds you see a Tesla, you don't think it's necessary. But in the beginning of any major transition, if the government helps push it a little bit, I think it's good. Right now, if it's gone, then I think it'll still be fine, but because of Tesla. But it helps not because of the manufacturer side, it's because people's mentality don't change overnight. So they're looking at like basic financial stuff, and if that financial aspect that kind of pushes them over to say, hey, maybe it makes financial sense to switch over to EV, whether they like the environment or not. I think that's more of the issue too, because I know in Japan the mentality is, oh, hybrids is the way to go because the EVs are still too expensive, the infrastructure isn't there yet. So, and I've talked to a few people, and I kind of asked as if I'm not well versed on EV stuff, and their mentality is very much about the stuff that we've gone through. That's not a problem anymore, but it is maybe in certain areas of certain places in the US or certain places in Asia and Europe, people have a hard time switching over still in terms of the mindset. So I think it's those policies help not just in terms of the manufacturing side. I think it helps the mentality of people to get the product first, and then they'll be like, because I have a friend who doesn't care, and she doesn't care, but the fuel cost is savings every week versus a gas EV, right? So I think those aspects kind of can't be looked because the mentality of the masses is still in part and large haven't gone over to EV yet. Like I was looking at one of the stats, it's like last year in the US was 7.3% market share. If you put in plug-in hybrids, like 10% of all sales were EV related, right? So it's still a vast majority of people who aren't purchasing EVs. So I think it's those policies are helpful.
And when you compare that to China, it's 51%. Europe is close to 30% now. US is so far behind at 10%. Okay, I do have to ask a question though. Is Elon did submit put a post up on X. He said, "I'm willing to serve," and he had a photo of himself as Department of Government Efficiency. In the space that he had with Trump, he talked about he thinks important for government spending to be cut to make it more efficient, and he said, "I'd be willing to help." And then the question was, would he join as a cabinet member? Would he be an advisory role? Would this just be a temporary thing? So people are asking, is this full time? Is he leaving Tesla again? Do you guys have any concerns about any of that?
No. First of all, he never left. I don't, just because some of his attention got diverted, um, he's got generals for all this stuff. It's not how it works when you're a CEO or an entrepreneur. You surround yourself with people that do the work and make sure the right decisions are getting made, and when that doesn't occur, that's when you step in. So I just don't view him as someone whoever left. But in my opinion, I think it's just an advisor role, and I think he's the best capital allocator that I've ever seen, and possibly in history. So if he's able to make decisions so well, as you saw during the Twitter purchase, and efficiency is paramount. and the government is the complete antithesis of that, and they waste and waste and waste, and you can come in with some out of the box thinking. I think it would benefit. I think it would be a tremendous asset, and it wouldn't require much time except for, just overarching advice on, some of these long tail effects of bad decisions.
Anyone else? Jeff Forsett?
Well, he certainly wasn't clear in when he responded. So, yeah, he's never left Tesla before. But yeah, I would hope it's an advisory role only. But I also think he views this as existential in terms of government spending, the deficit. I know he views this as a big problem. So it's fine to laugh it off and think it's a joke, and hope it's just advisory only. You know what? If I were in his position, I would at least start off advisory only, just to kind of feel out like what the constraints are and what the scope and span could actually be, and if maybe in the future, if it is necessary, then to come on in a more official capacity. But he'd be in a tough spot because in terms of his his vision for the world, like he's really focused on sustainable energy and multi-planetary life. And I can see what he's going to say, which would be, well, if you don't solve these issues, with the deficit and so forth, you're not going to be able to do these other things. It's actually going to get in the way. But also, if he's not at those companies driving those initiatives, that's also going to be an issue and get in the way. So my take on this is, if you're going to have these conversations in public, I would also hope that it's very public and clear, like who the clear leaders are, in the company, to to kind of take it should be obvious at some point that there's somebody inside of each of his companies that is the clear number one leader that can take the company and 10x it from where it is today. If that's not clear who that is, then I view that as a problem or a challenge. But yeah, I'd like to think that this is just advisory at this point. I think he's got a lot of good ideas. I also think, like, once you get into the rat race of the government, to go from ideas to implementation without authority is a problem. And if you're just a cabinet member, you don't necessarily have like this unbelievable authority that you think you may have. So president has tremendous authority, and the leads of the Senate and in Congress, they have a lot of authority in what they do. But kind of everything else in the middle, these cabinet positions, I mean, they have a lot of scope and span, but not necessarily tremendous authority to just upend the government.
Okay. Thank you, guys. Yeah, Sat, you got a point on that topic? Go ahead.
I think it's just helpful to have some kind of relationship with the politician to educate them and provide information at the very least. Like, compared to the previous administration, the current one, like that kind of like literally blast them away. You'd want a working relationship with the government, especially when trying to transition infrastructure and EVs and stuff like that, even on just that basic level. So I see it as a positive thing. I also think it's impossible for him to be like involved like heavily in politics when he has so many companies to run. So I don't think it's like helpful to be more than just like being a politician. But advisory, I think it's a really great role to have.
Okay, thank you, guys. So for our last topic, let's talk about AI and Tesla as an AI company. So, ironically, or some people might think appropriately, Tesla's not yet viewed and not yet valued as an AI company. And yet all this money is being thrown into AI, all the hyperscalers, but also the startups. Tremendous amount of startups are getting a lot of money for this. And ironically, again, I think that Tesla is the one that you'd want to invest in, because all these other companies don't have proven any business model to justify the trillions of dollars that are being thrown in this. There's a user named Zarathustra, and he posted 2 videos of 2 interviews. One is of Imad Mostak, who is the CEO of Stability AI. It's an text-to-image AI system, and Reid Hoffman. And both of these guys said that in the very near future, next 5 years, we're going to see an industrial AI revolution, right? So Imad said things will get really crazy in the next 5 years as we enter an industrial AI revolution, self-driving, autonomous agents, intelligence all coming at the same time. Reid Hoffman said the combination of learning systems, scale compute, and large language models will result in a cognitive industrial revolution because of the capabilities of AI models are continuing to increase. So people are, projecting and forecasting that this is it. But what's the real AI revolution? It is most likely going to be the industrial one, which is, some sort of impact to economies. And it's unclear what the business models are, except for Teslas, right? Self-driving and the bots. So doesn't it make sense that if you have money and you're investing in an AI company, why would you throw it at a startup who doesn't have proven business models versus Tesla that has two really logical business models that are massive businesses? What are your thoughts about that as the best investment today for AI, if you believe in this, is Tesla?
I think it's going to go through cycles. I think we're in the very early innings now, and there's a cycle of how do you perform these actions, and how do you get the hardware and software needed to actually to do inference and to do training, and that's where NVIDIA's making out now, and then eventually AMD and maybe even some Tesla in the future. And so so that flywheel is going to turn. So just imagine that flywheel turning. And then it's going to go to, and now it's at the hyperscalers. Now that flywheel is starting to turn. They're getting all stocked up with all their training power and be able to do computations in the cloud, and that's starting to spin up. But the one that people are kind of arguing back and forth is, well, where's the predominant margin pool going to come from? Is it going to come from these edge devices that are out in the world and interfacing with people? So smartphones, tablets, humanoids, cars, you name it, AI devices that can do local AI processes and functioning. Is the profit pool, is that the next, and is that going to be the winner in the end? So if you could come up with a device that can do some tremendous amount of AI, transactions, again, the edge devices, the ones that are actually out there with consumers, are those going to win? And then that compute involved locally and so forth, is that going to win? So I think that's the big debate now, I think. But this flywheel has started turning, and it just imagine like multiple plates spinning. The hardware side of this, on the training side, that one's off and running. Right now it's a winner take most, but I think other entrants are coming in, will come in over the next couple of years, and that'll be parsed out. But there's, you're talking about trillions of dollars of build out on the infrastructure side. And the question is just how many trillions of dollars is it going to be on the inference side, and then the software? Remember, just to keep this in mind, people can't even think about or imagine what was life like before a smartphone. And think about life before a smartphone with an app store. And now think about the how many multi-billion-dollar companies are an app icon on an iPhone or an Android device that would not have existed without the smartphone. If you just think about, the development and the innovation around the smartphone and the software and the ecosystem around that, how many companies then were spurred? Just think of Uber. Would the Uber business model work without the ability to go into your phone and hit that button in your app and call a vehicle wherever you are in the world? No. So now think about that times, thousands and millions, in terms of the number of AI, the possibilities that'll happen. We be able to do local AI computation and tasks and so forth, and what new things you'll be able to do localized that you weren't be able to do before. So, I think, I don't know if I answered your question or I just went all over the place, but I think right now it's a battle of, as you move from the training side to the edge side, and what are those solutions, and when are they coming, and when are they going to be in volume, and when are they going to, impact real users and consumer lives and volume.
Okay. Who wants to answer that next?
Your question about AI. I think if someone's going to invest and why they're investing in startups is because it's only doing that. Tesla's a publicly traded company, so I think that makes a gigantic difference. Even if you believe that Tesla will be one of the successful ones in terms of bots, you're still trading a publicly traded investment company, company investing in a company that's public. So it's better if you're going to want it private and have a bigger chunk or influence or return. If the startup is successful, that might be why they go for that, because a lot of the BIPO related investments are a very different sector.
Good point, Sad, except I'll say, and for somebody who starts startups and invests in startups, it's really risky, of course, to do a startup. But here's Tesla. And so the argument against what you just said is that Tesla is a large public company, but the returns of a robotaxi business and the returns of a bot business are so massive, you might as well be a startup that's less than $100 billion. What is it? $1 billion of, wait, I'm getting my thing, less than $1 trillion of a market cap right now. It has tremendous potential. So, and it's much more likely that they're going to get there than it is for a startup who has no business model, who has no, and has tremendous competition, right? LLMs is now a commodity. So what is it that these guys can do that Tesla can't? So yes, it's a different kind of investment, but the returns are so big and it's a little bit safer because it's a stronger company.
Well, I think, if you're a VC, your job is to find these companies. So I mean, it's a different business entirely. So it's really hard for them to then, if you start investing in publicly traded companies for other people with other people's money or the firm's money, then you're kind of in a different sector. Like the investment is like public related. So now you're managing a kind of a fund. Like it's a little bit different, I think. And I agree that in terms of like the probability of Tesla succeeding is much higher, but then I'm pretty sure there's going to be at least one other company that's going to succeed in that industry. I mean, no matter how many years of a ton of companies there are, it always like goes down to at least two or three. Like, and it's never like only one. Very rarely is it this one monopolizing company. So I think when there's all these humanoid ones out there, you can actually do a smaller investment and get a bigger return in that sense. So maybe that's the other thing. The risk is part less because it's the very beginning of the startups of the humanoid bots.
Okay, Xander, any comments on that?
I'm trying to do my taxes for CPA, but the thing that I'll add is, I think that if you skate where that puck is going, where would you invest? It just makes sense to me.
Yeah. Okay. Well, we can end it there. We'll resume again next week. This is Cyberpulse. Join us every Tuesday at 3 p.m. Pacific time, and follow the speakers, Xander and Jeff and Sat. Thanks, everybody. Appreciate you all. See you next week. Bye-bye.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.